Asia has, we use the term pre-traded a lot of the concerns that we've seen in the U.S. in particular. Let's just get some numbers around that. So the U.S. market's down about 20% from its January 4th high, and it was down at the lows a few weeks ago, down about 25%. Asia actually peaked nearly a year earlier, February 18th of last year to be precise, and the broad region is down over 40%. China's down 60%, and the offshore China stocks, the ADRs in the U.S. down 80%. So you can see that both in terms of time as well as in magnitude, that Asia has traded down a lot more. And valuations, of course, have compressed a significant amount. In the U.S., we're still somewhat above 16 times earnings, about 16.5 times as of last night. But we're at 11 and change for the broad region and about 8.5 for China. So I think that's right, that we have had a lot of kind of bad news telescoped into the share prices to the downside. In Asia, the challenge, of course, is that we still have, a concerning macro environment where we've got the Fed still has some work to do. We've got growth slowing down, and we've got a strong dollar. So I really think what we need to see is, probably at least two things. One is a greater sense that the Fed has done its work, and that's the much discussed Fed pivot. And then probably coincident with that, a peaking of the dollar. I think in that sort of circumstance, then we can start to see some further traction. That still seems to be somewhat away. So the punchline to your question would be, we still would have a somewhat cautious stance for the near term, but then would look to be more constructive and think markets can make more traction as we get deeper into 2023.
Tim, what did you make of this 5+% move on the Hong Kong markets, on the Hang Seng yesterday? Is that the market just getting completely over their skis in terms of prospects and the hope of a reopening?
Well, I think it's a combination of two things, Sri. One is that clearly we had a huge sell-off last week post the 20th Party Congress when the Hang Seng Index was down, well over 9-10% for the week, and the offshore stocks in the U.S. traded down nearly 15%. So that coming on top of an already weak set of markets and investors getting really bared up, and I can share some feedback. We've had a lot of investor conversations recently. But the punchline for those is that investors clearly are much more bearish than they were even just sort of 2, 3, 4 weeks ago. So I think the combination of market down a lot, sentiment really negative, it was ripe for any kind of recovery rebound and short selling covering. And that, of course, was sparked by the rumors that China was moving towards some sort of reopening. Now, we'll have to see if that holds traction. And we're still a little bit skeptical about how much the market can go up from here until we get somewhat more concrete evidence that China is indeed moving towards reopening.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.